Awesome. So now that I have my rectangle, my hourly structure, okay, 2330. The width of my rectangle is 20 pips apart. All right. And I drew my horizontal line at 2330 because it's a key level, and gold respects key levels. Okay. Every 50 pips, every 10 pips, I'm sorry, every 50 pips, every 100 pips, and every 50 pips and 100 pips. That's where I draw it. Now that I have this marked up, I'm going to draw the next hourly structure at 23. Right now it's testing the key level 2320 here. But I'm going to set a drive right here. 2310. Right, 2310. Take my horizontal line, try right here. 2310. And then got my rectangle. So I have outer zones and internal zones. My internal zones are based off my 15-minute. Okay. Why did I draw it here? Because price respected this area. It created a support level. You see how market price broke above this structure here? It was once to say you got to look left to be right. It broke above, created support, boom, created resistance up here, came back down, broke below structure, created resistance, resistance, and it finally broke through above. Retested this area again and came back down, boom, and bounced off. It respected the support level, right? It never broke below structure. So right now, it's within these two zones. Now that I have my resistance and my support, I'm waiting for that next break of structure. But I can also draw my internal zones based on my 15-minute. So I'm going down to my 15-minute. I can either draw my internal zone at 2325 or 2315. I'm going to draw at 2315. Take the horizontal line, 2315. And see how the 15-minute created resistance here, broke above, retest into the upside, resistance, came back down, broke below, support, resistance, broke above, retested, and went towards the upside. Now it created a support here. Now I'm waiting for it to go like this. It may train down. and finally break. Just and you can scalp it. You can scalp this move right here. Catch 50 pips towards the downside. If it does like this, if it breaks below 23.15 and closes below and gives you a confirmation candle, it gives you a bearish confirmation candle, then you can catch the move from 23.15 area down to 23.10 and catch a 50 pip move. This is for my scalpers. If you're scalping it, you can do that. If you're a scalp around, what lot size is preferably to take? Yeah, so for the lot size, it really depends on your account balance. And you're able to calculate your lot size. And I'll give you guys a formula here in a bit. But right now, let me mark up this real quick. But yeah, you guys can catch it 23.15. I got you. You guys are able to catch the quick scalp if it breaks below 23.15 to the downside. I'm gonna draw this blue for my internal zones. 20 pips apart. Round it to the nearest whole number. Right. You see here, 23, 20, 24, 25. I'm looking for sells. I'm not looking for any buys. So that's why I drew it below price. My internal zone, because I'm waiting for that break of structure. This is all liquidity from last night. This is all liquidity from yesterday. It price went bullish to the upside. We tested, created a resistance level here, and then it finally broke below this kind of trend line. But I'm waiting for that break of structure. I'm going to draw my next internal zone at 23.05. Going to go 5. Look at the 1 hour. See, there's resistance here, and then it broke above. Never came back down to retest this level. But this could be an area of interest because there's a lot of price action going on here within 23.05. So I'm going to draw it here because It's an area of interest. And price may come back down to retest this area here. So I'm going to draw my zone here. Three oh five, 306. All right, so I'm just going to keep these zones for now. I don't want to draw too many zones. 4 max for me. And I'm waiting for that break of structure. So right now, price is on a buy mode, a short-term pullback. Okay, so price may, again, this game is all about probabilities, okay? You gotta be able to catch as many confirmations. If price closes above this zone and gives you a confirmation candle, a bullish confirmation candle, then expect the continuation towards the upside. If it closes above and it gives you a bullish candle, then it's just a retest. All right. Price may continue towards the upside. But if it breaks below retest and gives you a bearish candle, then it's sell mode. And gives you a red candle, and it's sell. Okay. So right now, it's on a buy mode. Yeah, I'm gonna go over that, Kevin. Buy mode. If it breaks below, if it's sell mode. Right. I place my alerts at the key level. So for example, here, I'm gonna place it at 2315. So I click this icon here, this alert icon. Crossing down, because I want price to cross down, right? So I'll put it at 2315. Great. That's it. And I have it right there. So it's gonna notify me when price hits 2315. Okay. And once it notifies me, I look at the chart to see how price is gonna react, whether it's gonna break above or break below the zone. Okay. And I'm gonna be waiting. All right, right now it's all patience is so key, guys. I'm telling you, patience is so important. Okay. Wait for your confirmations. Okay. Don't get in the trade now. You don't want to get in the trade while price is moving. And also look at the time. Okay. I look at every 15 minutes, 30 minutes, 45 minutes, and the top of the hour, every hour. You guys study the time, you'll see that price will always react at every 15 minutes, 30 minutes, 45 minutes, and every hour price will react. You guys was able to see how price, like just now, it just hit the 30-minute mark. So let's see. You see how price is trending down. You see how it created a bearish candle, looking at the 15-minute. Okay. So wait for price to either hit your level, your key level, before you take a trade. You can use time as also confirmation, as part of your confirmation. Okay. So you could have caught the move for a quick scalp at 23.20, right? Right here. You see how price was, reacted at this key level at 23.20. Because why? Look, I created support here, broke below, resistance, came back down, support, came back up, broke below, broke above this resistance here, right? You always want to look at previous structure. You always want to look at previous structure, all right? Broke above this resistance here, broke above, and retested this area again. Why? Because if you look left, there was price action here. You see the pattern? Now you could have caught the sell here. It gave you a red confirmation candle. It wicked, but it never closed above 23.20. It closed below, and you could have caught the sell here for a quick stop move, and you trade zone to zone. I trade zone to zone. Okay, I don't trade in between my zones. I trade from zone to zone. Okay. So here, I could have drawn my, I would, let me see. Yeah, this could be my next hourly zone here at 23.20. So I'm gonna draw it 23.20 since it's right there. Try it here. Twenty-three, 21, 19. Gray. My alert, 23.20. Boom. All right. But I'm not taking any buys because I want to go with the trend. Okay, I'm waiting for that next break of structure here. All right. If you guys take the buy here, then you're going against the trend. It's a little bit more riskier. So I instead will wait for that next break of structure. Right. So this is what I see right now. Okay, I'm gonna set up my alerts here as well. 23.10. Yeah, New York session just opened. 23.05. All right. So I'm waiting for that next break of structure towards the downside. Me, I'm not looking for any buys right now. Okay, so now that I have my zones marked up, okay, look at the 5-minute. See how it's consolidating, and then it broke above. It's retesting this area again, 2320. I'm gonna look at my scanners. I'm gonna go to impulse. And I like to use impulse because it tells me where price is heading. It gives me the momentum of the overall market. And then I'm able to determine, okay, where it's going, and then it gives me more confidence to enter the trade. So gold, see right now, I'm getting blue arrows, a blue trend arrow, blue strength arrow. Price is above the EMA line. So when you see price that it's above this EMA, then you're looking for buys. So right now, price is on a bullish run right now. I'm waiting for price to create a new lower low, right? If it breaks below here, which is 2310, and I want to see the red arrow, the red trend arrow, and the red strength arrow. It gives me two red arrows, and then the 1 minute gives me a red microtrend arrow, and also gives me another red microtrend arrow, just like how I did right here. See this? I want to see another one somewhere up here. It'll probably pop up. If it breaks below 2310, then for sure it's going to happen. And I want to see price below this EMA line as well to really confirm that sell. As of right now, price is above the EMA. 23.15. Yeah. If it crosses below 23.15, then it gives me a chance to it's close to like giving me that confirmation to the downside, but really to confirm it is below 23.10. Boom. You guys can, there's two chances to take this sell. You guys can wait until it breaks below 23.15 and gives you a red confirmation candle and gives you a confirmation here as well. That it crosses below 23.15, which is right here, right? And price, at this point, the secondary EMA lines will be crossing. Okay, so the red will be crossing the blue, and then it's gonna start turning red. Okay, at 23.15. But to really confirm it, 23.10, right? By this time, when it reaches this price at 23.10, you guys will have sell confirmations for sure, because by the time it reaches that price, the red uh EMA line will be below the blue. I'm sorry, red will be above the blue, and then the primary EMA line will turn red, and then it will give you a red microtrend arrow. The strength will be red. Um so you guys can either take the sell at below 23.15 with that break of structure, or you guys can also wait at 23.10 and wait for that break and retest and write it down and wait for that red confirmation candle. Okay. But as of right now, price is, within this resistance sphere. Let's see if price closes above or below this structure here at 23.20, because right now it's at this level. It's retesting this level. But remember, guys, I want to go with the trend. But if it starts forming higher highs, higher lows, right? And if it breaks above 23.30, then it's on a bullish run. But wait for the confirmation, guys. It gives you a bullish candle here, then take it. Gives you another one here. Take it. All right. It's 23.25 right here. So this is what I see. But right now you see how it didn't close above. It's still like this is a strong resistance area at 2320. You see how it never closed above. It just hit the 45-minute mark and it didn't close above structure. You see, so the momentum of the market is towards the downside and there's more uh strength, you know, even though let me see impulse, let me refresh it. Yeah, it's still giving me a blue arrow on the strength. But that eventually is gonna turn red. Once it crosses below 2315, 2310, it's gonna turn red. So calculating the lot size is pretty much taking the account balance times your risk percentage, right? So if you have an account of $100, okay, $100 times that, I only risk 1%, 1 or 2% of my account. Okay, but I take 1%, which is 0.01. Okay. And that gives you $1, right? That you're risking. Now you take that $1 and divide it by the number of pips, right? Your number of pips, your stop loss pips. The one, so my sweet spot is 50 pips, right? With gold. You can risk anywhere between 30 to 50 pips with gold. But I choose 50 pips. Okay. So 1 divided by 50, 1 divided by 50, that's 0.02. 0.02. And that will be your lot size for $100 account. The same thing, the same way I do this, you can do it with any account balance. You just change the account balance. Okay. So here I divided by 50 pips because 50 pips is just the stop loss that I use. Okay, because the reason why I choose 50 pips because I want enough breathing room. Okay, for especially for gold because gold, you know, it's volatile and it also wicks. So I use 50 pips. So here, yeah, you see how it wicked here? It wicked at 23.23. But my stop loss, I would have entered my stop loss at 23.25 for that sell. Right? If I were to take this sell right here, I would have entered my stop loss at 23.25. Okay. My entry at 23.20. And then ride all the way down to 23.10 because I look for at least 100 pips on my trade. At least 100 pips. Okay. So I would have done this. 22.25 down to 23.10. That's a 1-to-2 risk to reward. All right, so that's just an example of how I set it up. So this is how you calculate your lot size, guys. Take your account balance times your risk percentage and decimal point, right? So convert that percentage to decimal. 1% is 0.01, right? Times it gives you $1. Then take the dollar risk, divide by your stop loss and pips, and it gives you your lot size. Does that make sense? And you can do this for any account balance. So let's say, for example, you have an account balance of $1,000, right? 1,000. Okay. 1,000 times 0.01. That's $10 that you're risking per pip. Now you take the $10 divided by your stop loss. That's 0.2, right? 0.2 lot size, which is $2 per pip. All right. That makes it. If that makes sense, drop a 1-1 chat box. If that makes sense. And if you guys have any questions, drop it in the chat or mute yourself. I hope you guys are getting some value. But this is my my markup. Okay. Let me look at the 1 hour. You guys can also use the 1 hour as, as confirmation. If it closes, if the hourly is about to hit the hour. So I'm not trading right now. Okay. I trade from 7 to 7:45. All right. If it closes below this hourly structure and it opens up a bearish hourly candle, then I'm taking that sell. I'm looking for sells. Look at the 4 hour. The 4 hour, look at that. The 4 hour has 6 minutes left. So especially the 4 hour, you can also use the 4 hour as confirmation. If it closes, if it opens up bearish, right? Or I'm sorry, if the 4 hour, okay, closes bearish below this hourly zone, then that gives me more confidence to enter that sell, right? If it closes bearish, if the next 4 hour closes bearish, then for sure it's going to trend down. It's going to trend down. But if it closes bullish above the zone, then it's going to continue towards the upside. So I like to look at the 4 hour as well to see where market is going to end up. But yeah, since I'm an intraday trader, okay, I'll go based off the hourly as my for my structures. And then I'll take my trade off the 15-minute or 5-minute. So as you can see here, we have 4 minutes left, less than 5 minutes until the next hour. Let's see how market reacts. I'm not taking any trades right now. The 5-minute. See, it's consolidating a little bit here. Market is failing to create that new higher high. So it failed to create a new higher high here. See, it failed to create here. It failed to create it here. See that? Looking closely. That's why it's so important to study candlesticks, man. Like, it gives you so much information as well. You see how it failed to close here? It just wicked. It failed to close here, right? Close below, it closed within structure. You see, now it's resisting here, now it's trending down. Okay. So when I see this, what is it? Triple candle patterns. Bullish down. I'm looking at my candlestick pattern sheet. Hmm. Yeah, right now just consolidating. So wait for that break of structure. Yeah. See how price went up and down, up, down. So price is consolidating right now. Okay. Right now it's just a waiting game. So price will either break above or it may continue down or will break below here. Breaks below. Boom, boom, boom. Take that still there. But I'm not trading right now. I'm not trading within. I'm not trading here right now. So we have less than a minute for the next hourly candle. It's So price close below the hourly zone. It opened up bearish. Let's see what price does. See how it's trending down now. Guys, I'm not taking a trade here. I'm waiting for this next break of structure right here. I'm waiting for this right here. I'm waiting for this move. I'm waiting for it to break below this internal zone. Retest, boom, right all the way down. Plus, today we have no news. And it's just a typical trading day. Just follow market structure. And just wait for that break of structure, because right now it's resisting here. It's consolidating a little bit. It's still deciding which way it wants to go. You see how it's moving so slow, it's just like indecisive. I'm not seeing, like a lot of volume. You see how it's like just deciding where it wants to go, whether it's going to break above or break below. You see that? So like I'm waiting right now. Market is just moving slow this morning. It created this impulsive move at 6 a.m. When I started the call, this move happened right here. This bullish move happened. Right. But I don't want to catch that trade. This is what this is a 50 pip move right here. This bullish move is only 50 pips. I want to catch 50 pips. That's more scalping. I'm not a scalper. I want to catch at least 100 pips. 100, 150 pips. Right. Yes, you could have scalped this here, but I'm gonna stick with my trading plan. Right. You don't have to catch every trade. That's one thing about trading. Like, don't feel the need to catch every trade. There's a lot of opportunities. Just stick to your trading plan. I would have caught this move easily, right? The previous hour, I could have caught this 50 pip move easily, no problem. But it's not about that, right? It's not about getting in every trade that you see. Right? I don't need a rush into a trade. No, like this, like right? We didn't take any trades, guys. Like I didn't call out any trades this session. I just did my markups, okay, and I see potential entries here, but it didn't hit my entry. It didn't break below, then retest. It didn't break above and retest. Like I'm not seeing any action right now, so that's why I didn't take any trades because I didn't see anything happening. You see, so like on these sessions, like expect that to happen. There's gonna be days that it just you don't see anything happening, and we don't take any trades because we don't see anything happening, and that's okay. That's part of the game. This game is all about patience. Let the trade come to you instead of you rushing a trade. let the trade come to you. Okay, guys? So I'm waiting for the trade to come to me, and it does this. Okay, when it breaks below, retest, I'm gonna take it here for a sell, down. If it breaks above, I'm gonna wait for the retest, take the buy up to the next zone. If it breaks above this structure, 2230, break, retest, I'm gonna take the buy up. I'm waiting for this to happen. Okay. I'm gonna wait if price creates a new higher high. If it creates a new higher high here, if it breaks above, creates a new higher high, breaks below, opens up bullish, closes above 2320, and I'm gonna take that buy. Okay, this is a buy mode here. Sell mode down here. Okay. I'm not trading in between these zones. The reason why I drew 2315 here is because this is where price is currently right here. Okay. I drew it below here. I drew it below price because I'm waiting for price to break below the structure here, because it was a resistance and then broke below, broke above, became a support, and then boom, created resistance here. Okay. And I'm waiting for the next break of structure, because support, when you see a downtrend happening, I want support to become resistance. So this support has to become a resistance for that sell. So this support, right, I'm waiting for it to break below and retest that sell. And that gives me a confirmation that it's on a continuation to the downside. Okay. Now I'll take it here. And if it creates a new lower low here, even better. If it creates a new lower low here, even better. Because I know that is trending down. It breaks below, retest, take the sell here, boom. And it creates a new higher high at 23.25, right? 23.25. Maybe this is a potential higher high. Will it be a higher high? I don't know. We'll see. That's why I'm putting it here. Higher high. Okay. Does that make sense? Drop a 101. You guys are getting some value. That's the end of the call. If you guys have any questions, drop it in the chat box. Patience equals good sniper. Yes. Drop a 101. Guys, we didn't take any trades today, but hey, we went over this because I feel like some of you guys needed this. All right. You know, this is what I see in the markets, okay? Trade at your own risk. But this is what I see. And, today, London session, this is all London session right here. So people that trade London session, they really capitalize, because look at all this. This is all London session. And then price broke above, took out all these sellers. Okay, I didn't trade yesterday because I don't trade Mondays. Because right now, market is just setting up. Um, So yeah, guys, this is what I see. See, the hourly candle is bullish, so it may break above. So let me take the Fibonacci low to high. 61.8 zones at 2298. Yeah. But yeah, guys, that's the end of the session. I appreciate you guys for hopping on. Have a blessed day, and I'll see you guys tomorrow morning. Let's get it.